Money on my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Raidenaire, and we are back at it again with another financial update for the month of September 2025. This is going to be hitting you on Monday. This is the first week, the first full week of October, so we'll be getting this to you on the 6th. Have a little leeway. We do these breakdowns where we come at you every day throughout the course of the week, the first full week of the month, and this month has been a pivotal one. Before we jump into the conversation, let's go ahead and make sure we hit that like on the way in. If you've been here more than twice, I'd like to welcome you to hit that subscribe button down there at the bottom. And while doing so, do not forget to check that bell notification to turn all on. I promise not to flood your feed. Last but not least, one of the most pivotal ways that you can support the channel is to share the content. That helps me get out into the algorithm, helps other people hear what what I have to say over here, give my little 2 cents, because that's what we're doing, giving our 2 cents to the ether out here, tracking my journey and the adventure therein. And I come back with the receipts. So like we follow up at the beginning of every month with how we did the previous month with a breakdown of the things that I am currently tracking that I find to be important. Now, it might not be the exact same for other people. There are other things that I track that I like to keep note of. For instance, like how much fuel I'm buying, like how much gas I buy. And then there's stuff that I don't, because I'm not really big on budgeting. I just like to know how much gas I bought. Like if I'm buying a lot of gas, like that, it's one of those weird things kind of important to me. I don't know why, but that's one of the gauges on like, if I'm spending too much money, which I am. But yeah, so we're gonna jump on into it. Let's see here. And we always start this off with the net worth. Now, our net worth did increase $2,661.72 over the month of September, which is pretty interesting as we are kind of focused in heavily on knocking out some of this debt. I did have a little faux pas in the month of September. And it's just a little, I'm not cognizant of what I'm doing, and I've trained myself to navigate in a certain fashion, and it came back and kind of bit at me a little bit. Now, towards the end of the month, we had a pretty good run up. We're going into October. This last quarter is going to be pretty interesting. Most of our positions are heavily income focused because I'm not really big on traditional stock market when I could just buy Bitcoin. So a lot of money goes into getting these income positions where they need to be. We'll talk more about that tomorrow on Tuesday when we go over the portfolio update. So make sure you're tapped in the morning on Tuesday morning, because we will have that portfolio update coming up. But yeah, we increased our net worth $2,661.72, which we're on the journey back up to the $300,000 range. We're in the $300,000 range, but before 2025 started, we had crested $300,000, making a new all-time high for our personal net worth. And then obviously healthy retracements, everything pulled back. A lot of my income or my net worth is tied to Bitcoin. And, Bitcoin goes down, it drags the net worth with it, and we are where we are. So we're eking back up to those all-time high ranges, in the days before recording this last night, actually. Bitcoin hit a new all-time high twice. It printed a new all-time high, then immediately after that printed another new all-time high. So, and then today, as I'm recording this, we're back down bounced right off that new all-time high. We're still in the 120s, and yeah, we're kind of where we're at. So we made forward progress, but we're going to talk about why, which is our next metric that we track. Now, our savings percentage, I was for certain, and I gave everybody a preface that my savings percentage was going to go into the dumpster. I was going to be saving like a normal person, like the rest of you, like barely anything. And then what I did, because I don't actually, I'm on autopilot with how I move my money now because I've been doing this for so long, that we ended up saving 60% of our income this month, which is well over, like, that's in green range. Like, we basically were just building positions, and I didn't notice how much money I was actually putting into savings until we got to the end of the month. And we're going to be making some adjustments because what the cost response of that is my debt balances went up, which means my proclivity. I'm the person who will get money into the market and let debt ride and accumulate and then pay it back later. But I'm trying to get to a point to where, like, the credit card debt is 100% tied to assets. And when I do things that way, I'm taking out loans or lines of credit at low to 0% interest rates to buy assets, not just, continuing my life and then also not paying off credit cards, because that's something that I will do because I like my savings percent high. I like my money in the market because my money is not just sitting in the bank. My money is making more money. And getting into that game, it's like you start forgetting about everything else. But we have a little bit of a debt mess to clean up that we've been working at, and I want it gone. So I'm calling it again, Babe Ruth style. My percentage rate of savings for the month of October is going to be in the dumpster. Because I'm forcing myself to start redirecting some of those tools. I also am going to have a cutoff point for after I get to a certain amount of income, we're just going to let stuff pay stuff off. Like, that's what we're doing. So that brings us to the next piece of our conversation, which is our total saved. I like to look at the total amount I saved. It makes me feel good. And this month we were at $4,127, which is nice. It's a good, healthy amount of money. Namely because we're in a position now to where that Cash App flywheel can be activated every 2 to 3 weeks, which means we're getting a lot more money coming in from the flywheel because we are generating the income that we should be generating, which is awesome. And it comes in weekly. So, like, we're constantly chipping at it. It gives you a little bit of a leeway when it comes to how you're moving your money around. So we've got that going too. So that's pretty awesome. Again, we're getting ready to do some updates on how we're utilizing the flywheel because we're saving too much money. Yeah. So moving on, how much income did we make this month? Now, I had my first $10,000 month. Let's take a look at the data here. No, that's the wrong page. I think, when did we, so September, what did August look like? Because we had one of these. Yeah. So August was a big dividend payer. We had that triple pay while we were eking out what was left, the little last couple of sputters off of the Misty engine. And coupling that with our dividends, we broke the $10,000 threshold for that month because obviously we got an extra paycheck that month. Like, all the stars aligned. We had a decent chunk of DeFi income come in that month. Like, everything was running at our backs that month. So we broke the $10,000 threshold. This month we're back down into normal range, quote unquote normal. So that puts us at $6,815. We're growing the income. And for reference point, the month before that, the month of July, we were at $6,777.53 for income. So we are growing that income base as far as normal terms are going. And that's one of the metrics that we look at. We want to make sure that the income is growing every month. Now, August is an outlier because we had extra weeks in there, extra paycheck, extra dividend income. August was a big month for us for the funds that we were in and just paydays in general, the way they lined out. We did beat our take home in the month of August, which was a first. I don't think we were beaten at any other month until this month. So this is a normal month again. And we have broken through one of our ceilings of we are now in a position to where we are bringing in more income from dividends than what we're taking home. So that's pretty cool. Moving on to the dividend income, we had $3,274 for the month of September, which is great. Beating that take home, we're starting to run away. Hopefully this income building that we're doing continues. Like we've got income coming from multiple sources. We are not currently beating it in the primary income portfolio, but collectively between the primary and the lifestyle portfolio, all dividends that are coming in, we are beating the take-home pay, which is cool because I do have those portfolios separated for a reason. As far as the DeFi income, we had $205 for this month. Not great, nothing going on, but we're seeing some growth in the crypto space, so kind of riding it. At least we're getting something. We're getting paid something while we're waiting. And that's like the DeFi income. I'm not really focused on that because the traditional finance is giving me everything that I need right now from an income perspective. So that's where that focus is going. The DeFi income that's coming in, we are flipping that into Bitcoin purchases at this juncture. Like that's kind of where all that money goes. So, it is what it is. And then last but not least, we have our month ending credit score, which, hold on, we got to pull the data on that. So the last month, the month of August, we ended with a credit score of 730. Month of September, we closed out with a credit score of 744. Now, full disclosure, because we did run up our credit a little bit, that credit score has come down inside the month of August, down into it's like 741. So that puts us in a position where we might hold off because I do want to get up into the 750s before I actually purchase a vehicle. So we've been looking at vehicles, but I'm going to go ahead and put the gas pedal down full throttle for the month of September. Or hold on, the month of October. Well, duh, we're looking at the end of September here. That's what we're quoting. Oh, month of September, we actually ended. No, I updated that at the very last day. I did re-update that number. So we ended the month at 742 because that was when the dip hit. And that's still 12 points above where we were last month. So we're moving that in the right direction. Either we're playing the game well. Over the month of October, we will continue that trend and keep pushing forward to kind of grind those bills down, grind that debt down. I will be attacking the interest-bearing debt first, as always, because we have a couple of cards that we are carrying balances on, namely our daily driver, but I also have my utilities card that we're currently using for utilities, and that's also carrying a balance as well. Nothing that can't be fixed and nothing that is insanely high as of yet. And we're going to go ahead and start slamming on the brakes before we get to insanely high, because if you're digging yourself a hole, the first thing you got to do is stop digging. So that's going to kind of summarize our month of October. And I'm not complaining about it. I've got also, let's see here. So our month of September that's kind of it in a nutshell. I have no complaints about it. It's a pretty solid month. The one thing that we're going to be improving moving into October is doing a cutoff for the savings. Because like after I get to about $2,000, I'd rather have that extra $2,127 going into just paying off debt, or going into just bringing that margin balance down. So that way, the end of the month, we can pull that towards the end of the month, we can pull that next big chunk of debt over, as opposed to just having it saved. Because as I move the debt down, I also am ratcheting more and more of my paycheck to just land directly into my brokerage accounts. And I think that's the piece that's getting overlooked, is like, oh, you've got an extra $200 and an extra $100 disseminated between these accounts, and you're also investing that as it comes in as well. And I think after a certain point, I'm just going to be like, enough's enough. And we will just let that go into the margin pool to pay the margin pool down. So that way we can deploy more out of the margin to, get that debt out of sight and out of mind. The other thing is the Cash App flywheel. We're going to be making adjustments on that, because that is another reason, now that that's moving faster, that I have more income coming in as far as what's going into investments, because that is the majority going into investments. And we're going to be chunking into that to kind of get some more of this debt out of the way. And yeah, that's what we're looking at moving into the month of October. So hopefully, as we do the recaps, some of these numbers will get worse by intention, and hopefully some of these numbers get better. So we should see the credit score shoot up a little bit more. Savings percentage, I'm expecting that to come down. Total saved, I'm expecting that to come down. Income is going to remain hopefully flatlined, as I won't be buying as much. Actually, it should be going up a little bit, but yeah. So we're gonna be making the adjustments, and then obviously on the debt crusher episode, there will be probably beating our chests over there, because we're getting the debt out of the way, securing those gains as far as the interest that we're paying. So yeah, this has been another great episode of Financial Updates. I hope you guys got some value out of it. Tap in with me down in the comments. I do read them. I do respond to all of them. And we'll see you next month. It's your boy, Reckless Ray Dinero. This is Future Financial Strategies, our financial update for September 2025. And I'm out. Peace.
Money on my mind. Yeah. Focus, got no time for games. Nah, I don't play, man. I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.